The financial landscape in the United States is shifting faster than most people realize. Interest rates, artificial intelligence, energy demands, and geopolitical tensions are all reshaping where smart money is flowing. If you are trying to figure out where to put your hard-earned dollars in 2026, you are in the right place. We have done the research, analyzed the trends, and narrowed it down to the 5 best investments you can make in the United States in 2026. These are not guesses, these are calculated, well-reasoned picks backed by economic data, market momentum, and long-term growth potential. We are counting down from number 5 all the way to number 1, so stay with us because the top pick might genuinely surprise you. Coming in at number 5, we have real estate investment trusts, commonly known as REITs. Now, before you think this is just another boring real estate play, hear us out, because REITs in 2026 are positioned in a very unique way. After years of high interest rates suppressing property valuations and making borrowing expensive, the Federal Reserve has begun easing its monetary policy. That shift is a massive tailwind for REITs. When rates drop, the cost of capital for these companies decreases, their property valuations rise, and dividend yields become far more attractive compared to bonds. In 2026, sectors like data center REITs, industrial REITs, and healthcare REITs are particularly compelling. Companies like Realty Income Corporation, traded under the ticker symbol O on the New York Stock Exchange, continue to deliver consistent monthly dividends and have a diversified portfolio of commercial properties across the country. Another strong name is Prologis, traded under the ticker symbol PLD, which dominates the industrial and logistics real estate space, directly benefiting from the continued growth of e-commerce and supply chain restructuring happening across America. REITs give everyday investors access to large-scale real estate without needing hundreds of thousands of dollars to buy property outright. They are required by law to distribute at least 90% of their taxable income to shareholders, which means you are getting a reliable income stream on top of potential capital appreciation. For 2026, this is a smart income-generating play that belongs in any diversified portfolio. At number 4, we are talking about artificial intelligence infrastructure, and this goes beyond just buying shares in a chatbot company. The real money in the artificial intelligence revolution is being made in the picks and shovels, meaning the companies building the foundational technology that powers everything else. Think semiconductors, data centers, and cloud computing platforms. The demand for artificial intelligence computing power is not slowing down in 2026. It is accelerating. Every major corporation in America is integrating artificial intelligence into its operations, and all of that requires enormous processing power and infrastructure. NVIDIA, traded under the ticker symbol NVDA on the NASDAQ, remains one of the most dominant forces in this space. Their graphics processing units are the backbone of artificial intelligence training and inference workloads worldwide. Despite already experiencing massive growth, analysts continue to project strong revenue expansion for NVIDIA well into the latter half of this decade. Another stock worth watching is Broadcom, traded under the ticker symbol AVJO, which is deeply embedded in the custom chip and networking infrastructure that artificial intelligence data centers depend on. Microsoft, under the ticker symbol MSFT, also deserves a mention here because of its massive investment in artificial intelligence through its partnership with OpenAI and its Azure cloud platform, which is seeing explosive enterprise adoption. Investing in artificial intelligence infrastructure in 2026 is not chasing a trend. It is recognizing that this technology is becoming as essential as electricity was in the 20th century. Number 3 on our list might be the most underappreciated opportunity heading into 2026, and that is United States Treasury securities, specifically longer duration Treasury bonds and Series 1 savings bonds. Here's the thing that most casual investors miss. When interest rates begin to fall, the value of existing bonds goes up. If the Federal Reserve continues its rate-cutting cycle into 2026, locking in today's still elevated yields on Treasury bonds could generate meaningful capital gains on top of the interest income you're already collecting. For conservative investors or those approaching retirement, this is an incredibly compelling risk-adjusted return. Series 1 savings bonds issued directly by the United States Treasury are also worth serious consideration. These bonds are indexed to inflation, meaning your return adjusts with the consumer price index. In an environment where inflation remains a concern, I-bonds protect your purchasing power in a way that a standard savings account simply cannot. You can purchase up to $10,000 worth of I-bonds per year per person directly through the Treasury Department's website. For married couples, that doubles to $20,000 annually. The safety of these instruments is unmatched because they are backed by the full faith and credit of the United States government. In a world full of uncertainty, having a portion of your portfolio in guaranteed inflation-protected instruments is not just smart, it is essential. Coming in at number 2 is the healthcare and biotechnology sector, and 2026 is shaping up to be a landmark year for this industry. The convergence of artificial intelligence with drug discovery, the aging baby boomer population driving unprecedented demand for medical services, and a pipeline of breakthrough therapies make this sector one of the most exciting investment opportunities available right now. On the large cap healthcare side, companies like United Health Group, traded under the ticker symbol UNH, and Johnson & Johnson, traded under the ticker symbol JNJ, offer stability, consistent dividends, and exposure to a sector that performs well regardless of broader economic conditions. People need healthcare whether the economy is booming or contracting, which makes these stocks remarkably resilient. On the more aggressive growth side, biotech companies are developing treatments for cancer, Alzheimer's disease, obesity, and rare genetic disorders at a pace never seen before. Eli Lilly, traded under the ticker symbol LLY, has become one of the most talked about stocks in the entire market thanks to its groundbreaking work in obesity and diabetes treatments. The global demand for these medications is staggering, and Eli Lilly's pipeline suggests this growth story is far from over heading into 2026. Regeneron Pharmaceuticals, traded under the ticker symbol REGen, is another powerhouse with a robust pipeline and strong revenue from its existing blockbuster drugs. The healthcare sector combines defensive characteristics with genuine growth potential, making it an ideal core holding for 2026. And the number one best investment in the United States for 2026 is the S&P 500 Index Fund. Before anyone rolls their eyes, let us be very clear about why this is the top pick. No single stock, no matter how well researched, can match the risk-adjusted, long-term performance consistency of a broad market index fund. The S&P 500 tracks the 500 largest publicly traded companies in America, and it has delivered an average annual return of approximately 10% over the past several decades. In 2026, with corporate earnings expected to grow, artificial intelligence productivity gains beginning to show up in company financials, and the Federal Reserve providing a more accommodative monetary environment, the conditions for continued equity market growth are genuinely favorable. Funds like the Vanguard S&P 500 ETF, traded under the ticker symbol VOO, and the iShares Core S&P 500 ETF, traded under the ticker symbol IVV, give you instant diversification across every major sector of the American economy with extremely low expense ratios. You get exposure to technology, healthcare, energy, financials, consumer goods, and more, all in a single investment. The beauty of index fund investing is its simplicity and its power. You do not need to pick winners. You own all of them. Warren Buffett himself has repeatedly stated that for most investors, a low-cost S&P 500 index fund is the single best investment they can make. In 2026, that wisdom holds stronger than ever. Whether you are just starting out or you are a seasoned investor looking to anchor your portfolio, the S&P 500 index fund is the most reliable path to long-term wealth building in America. These 5 investments represent a blend of stability, growth, and income that positions you well, no matter what 2026 brings. From REITs and artificial intelligence infrastructure to Treasury bonds, healthcare stocks, and the unbeatable S&P 500. There is something here for every type of investor. The key is to start, stay consistent, and think long-term. If you found this video helpful and learned something valuable today, please give it a thumbs up. It truly helps this channel reach more people who are trying to make smarter financial decisions. And if you want to stay ahead with more content like this, consider subscribing to the channel so you never miss our next video. Your financial future is worth investing in, and we are here to help you every step of the way.